The 2022 financial year was surely a stomach-churning one. This roller coaster ride made the investors scratch their heads in the worst way possible as the volatility of the market was at its peak. Big investors firmly stated that we are heading a few steps closer to the inevitable inflation. Right before the danger bell rings, the stock market is set to react. Hence, the first quarter of 2023 is expected to make up for the losses made in 2022. The market has finally realized that the pain from the high profit rate is still going to be endured. To add even more spices, the Russians decided to throw a war on their neighbors out of the blue. All thanks to it, most of the stocks touched the never-expected low. With each passing day, the drum roll for an American recession is getting louder. Hence, experts believe that there is one highly defensive sector, which could be a smart place for you to put your money in 2023. On the other hand, it has been predicted that one of the largest publicly traded companies could be in for a rough year ahead. Stick with us till the end as we analyze the market play for the 2023 seasons and list out a few of the best stocks to keep your money safe and intact. Before the video starts, make sure you hit the red subscribe button and hit the tiny bell icon right beside it to always find us in your home feed. Let's begin. Inflation might be just another financial crisis on the papers, but in the real world, it could mean so much more than that. Several financial assets like stocks, crypto, and bonds are set to struggle as inflation will surge. As a result, the Federal Reserve will continuously raise profit rates in an attempt to lower the spiraling consumer prices. Since 2023 has begun, the S&P 500 index is down by 19%. This was obviously not the best news for the investors, as the Dow Jones Industrial Average is also down by 9%. It felt as if the dreadful financial year of 2022 hadn't fully left its effect in the first quarter of the new year. Wait till you hear that these are not the worstly affected markets. Tech companies which faced similar blowouts last year continued with the same momentum. The worst losses of the major benchmarks out of all stocks were faced by the tech-heavy Nasdaq Composite. These concentrated losses in the tech fields were down more than 30% since the beginning of 2023. It almost felt as if a new year and a new beginning is not true. Rather, the new year reflected most of its preceding year's characteristics. But the good thing is, the investors had already predicted this and even found a way out. Investors have said it once, and they will see it again, that potential losses are set to take place in cases of short-term investments. Multi-million investors have clearly stated their take on the already much inflated market, while they cannot emphasize more that short-term investments could turn out as a huge disappointment. It has been predicted that stocks will continue to slow down even in the second quarter of 2023. New investors could experience even more market lows, similar to the ones that rattled investors earlier this year. Experts from JP Morgan have stated that the proverbial snowball is expected to gain some momentum in 2023. It is because the consumers, as well as the companies, are collectively and meaningfully cutting out discretionary spending and avoiding capital investments. It was stated during the 2023 Market Outlook Summit, and other investors cannot agree more to it. So, is it going to be like this throughout the 2023 financial year? This is what Dubravko Lakos-Bujas has to say on it. He believes that investors have to search for a silver lining that could arrive by the end of this year. An eventual pivot could push stock prices majorly by the time 2023 financial year would come to an end. But the real deal with this silver lining is, nobody knows when it will arrive. Billionaire investors like Warren Buffett have clearly stated, now that the stocks are available in probably the cheapest, one should not miss the opportunity to get their hands on them right away. But mind you, he had advised that short-term investments will be too far from benefiting them. It all narrows down to identifying the silver lining when stock prices would actually start to rise up. Hence, this is why investors have been emphasizing more on long-term investments and holding onto them till the end of 2023. Investors expect that the S&P 500 will go to as high as 4,200 points by the end of this financial year. The expected silver lining could arrive anytime around October 2023, which could provide a bump of about 8% of every stock from today's level. Badly hit companies like the vehicle industry and the tech companies could see a huge bump by October and November 2023. So, if you already got your money caught in a few of those, try to hold it in. Every prediction has some exceptions to it, just like this one. If things continue to go the way, and it is going, then the predictions may turn out to be true. On the other hand, if the index could reach the level earlier this year, then the economy might perform surprisingly well. Whatever the case may turn out to be, it is widely believed that the economy will seal down at 3,900 points by the end of 2023. It is slightly higher than today's level and seems believable too. Did we yet tell you that the market will continue to be volatile this year too? Yes, you heard it right. With a frequency of swings more than 1%, we haven't seen more stability since the Great Recession is on its way. So, the more frequently the prices of stock will move, the more volatile the market will turn out. Amid the threat of recession, the roller coaster-like movements of the stocks could stay high in the month of March and April. Along with that, slower hikes in profit rates will be reflected. This could sound intimidating at first, but experts believe that volatility is extremely normal. It is all upon the investors to stay calm and focus on long-term investments. In this way, they can successfully get right out of the storm. Not just that, they could actually tend to improve the aftermath of the big dips the market is set to take. So stay calm, rookie and veteran investors. Even though stocks are highly expected to struggle throughout this year, experts say that bonds are all set to experience a comeback. To be precise, it is said that bonds, which were the biggest losers of 2022, could be the biggest winners in 2023. The US bonds are set to return to somewhere in between 4.1% and 5.1% annually over the next decade. This could be huge from the point of view of the previous years when the returns were less than 2.5%. 2022 was a rare year when prices of both stocks and bonds fell. Except for that, bonds are always there to save the drowning ship when stocks fail to do so. Moreover, falling bond prices are directly proportional to bigger yields and much more income for the investors. So without any second thoughts, higher yields are a gift to those investors who have been deprived of bond returns through all these times. In the end, investors should be prepared to the teeth to stay intact in this daunting stock market of 2023. Financial experts advise us to continue to invest even when the market is not performing well. According to experts, these are few stocks you should look out for to invest in the 2023 financial season. Alphabet, Cheniere Energy, Whirlpool, Tesla, IMAX, and NewScale. These predictions have been derived from the fact that tech companies are set to make a big comeback. Do let us know in the comments down below, what do you think of the 2023 stock market? If you liked the video, don't forget to give it a huge thumbs up until we see you next time.